In three, two, one, and we're live. What's going on, everybody? Welcome to Wolf. Welcome to another stream. Just got off a little bit ago with the Fairside team. Talked a little bit about crypto insurance, and so definitely check that stream out. It's actually a pretty cool conversation with Brandon and Drew. But today I have Mr. King Bits of Wealth, King Bear, the bear of all bears, the bear of bad news bears. He's with us to actually deliver good news. No, I'm kidding. He's a high level trader and coming on to do some trading education here and to teach the people things we need to know to survive these markets because they are unforgiving in this cycle in particular. And yeah, man. Let's get into it. Bits, how's it going?
Nice, man. Yeah, good to be back. I always enjoy these, and you and I talk a lot about it's an interesting market right now, and there's a lot of opportunity to provide educational content and stuff that's like practical application. It's like what can you walk away from this space or this stream and right away go test yourself or go use yourself, right? And hopefully it brings value to you. So yeah,
definitely.
I'm excited.
Yeah, man, absolutely. Well, listen, we're gonna dive into it here and see what's going on the charts. Yeah. Maybe like a good place to start would be Bitcoin, because yesterday Bitcoin was all over the place with Trump saying all sorts of stuff and people watching all the news. So we were in the middle of space actually talking about Bitcoin with all the maxis and all that stuff was going down. We were seeing drastic price action. And so for me, in my head, I was like, traders must love this because the volatility, but it's just so, I don't know if they love it because it's just so volatile in every direction.
No,
I feel like
they
people
do.
Are just getting stopped out, right?
No, they do. Yeah, if you know how to trade, you're loving this. Yeah, if you know how to trade, you're loving this. Yeah.
Very nice. All right, let's get some of your thoughts though, because we ran up and then came down as low as 81K again. Just feels like we're just bouncing between support and resistance, like you were saying on those lower time frames.
Yeah. What's interesting is I ran a stream, I think the night, what was yesterday? Yesterday was Wednesday. So yeah, Tuesday night, I ran a pretty late stream, and we talked about like all the scenarios that could potentially happen, or at least the ones that I was able to see, right? And having my volume profile, like one of the things we were watching, let's see if I still have it on here. Actually, I might have just no, I don't see it. I guess I might have deleted it. But there was there was like a zone right around here that we were kind of watching as like a localized support resistance zone, right? And sure enough, I mean, it went a little past it on the spike, as it does sometimes, but we did get at clear rejection from that zone. And some of the confluence you could have seen with that is also on the crypto total market cap chart. Like this is one that I've been posting the last few days and just really trying to highlight that this March 2024 high from last year, where the market stalled out and then went sideways essentially after that top, it could be a resistance zone, and it could be a potentially longer term, like a mid to long term resistance. And so the market yesterday, on the euphoria, that little fake out, it pushed past it, but overall, this is a rejection of that level, of that zone. Even though you went above it, it's a rejection from that level. And so now we're back below it. BTC is back below that, So just kind of watching it. And this is where, I've kind of had this stance really, that all of this chop that's going in here, like this is good chop to trade if you know how to trade the chop and you know how to scalp. And you understand like that this is low time frame chop, not super high size or high risk type trading, but that the high confidence, high probability trades, those are going to happen if BTC can get up here, or those are going to happen if BTC can come back down here to support. Like these are the two places where I talk about edge all the time, right, Kate? So I talk about like where as a trader do you have edge? Well, your edge is going to be up here if you come up here, because you're potentially looking for another short. Same thing you did up there, right, in the past. Your edge on the downside is going to be down here, because if you come down, you're looking for support, just like you did previously. So all of this here in the middle, this is kind of that example where I said, like, look, you could put a black box through all of this, and essentially just say, what's happening in here is irrelevant.
Mhm.
Like, you could essentially say what's happening in here is truly, in the big picture, is truly irrelevant. Where it matters much more is if price starts poking its head up here, then I'm interested in what happens. Price starts poking its head up here, then I'm interested in what's happening. Or the opposite, right? Price starts coming down here, then I'm interested. Starts coming down here, then I'm interested. In this like middle zone between the two high time frame, I'm just not really um leaning into like high probability trades, because they just don't exist there.
Mm.
Does that make sense?
It does make sense. Yeah. Well, there's also, that would be also for people who are like following order flow or trying to learn order flow and watching for volume. That's usually what the lowest volume is. And
Yes.
so that's when you can expect either a turnaround or potentially, if the momentum has changed and now we're going to break through, that's where it would happen. That's that level to pay attention to, right?
100%. I would even say, like, for the traders that look at heat maps for liquidity or liquidations, like these up here are going to be where some of the larger hot zones are going to be, right? And here in the middle is kind of like the chop. It'll come and it'll grab liquidity from the upper part of the range. It'll come and it'll grab from the lower part of the range. But this is really just chopping. Like, this is just noise. Everything that's happening in here. The big moves, to your point, like if you're looking order flow, if you're looking liquidity, or you're looking at heat maps, it's these larger higher time frame zones, and these are built on the higher time frame. Like, you extract these zones by zooming out. Like, you go to the daily or the weekly, right? Like, let's start with the daily, for example, and that's where you build your higher time frame zones, right? Like, why is this zone above us a high time frame resistance? Well, because previously this was the bottom of this entire chop that we had up here, essentially above 90K, right? That was the floor. So if this was the floor previously and we're now below it, now it is potentially the ceiling. Like, that's how you have to look at it, right? But if you're so zoomed in on a 1 hour or below, you're going to potentially miss some of this higher time frame clarity, right? You're not going to see that, hey, this is a significant zone that if price pushes up into it, we got to be careful up here. And the same with, if you get a move down here, you may miss that, hey, this is interesting. You got a vector here. You've got some dips down into it. Then you start getting into like the March high of last year, which is also, it's essentially like a range high from last year, which would be an amazing pullback opportunity, so I still think that nothing here to me is like screaming crypto is broken yet, right? Nothing here is telling me this can't turn around and go higher at some point. This is still very bullish structure. If you notice, we're still above the highs over here. And typically in crypto, when you're in a strong uptrend, you tend to have your pullbacks to the prior highs and not break below it. Meaning this pullback here would not break below that. It kind of sustains there. If you start dipping into, beyond that high, you're still bullish as long as you're respecting this low, right? But the most bullish outcomes tend to happen when you find support on a prior resistance level. So, and I think that's potentially what's happening here is you're just getting essentially that. You're getting a big move where you're going to pull back and you're just coming back to roughly these highs here, right? It's essentially what's happening. So nothing really bearish about that, to be honest. I mean, we start getting worried if you start dipping down here, then we've got some problems. Up here, it's like, sure, maybe this is not the outcome CT wanted. We didn't want to have to pull back this deep, but this is still bullish structure on a high time frame. Extremely bullish structure. Oh.
Well, how low can that go? That last part of the arrow there in that gray zone. How low can that go before you're like, okay, we've lost the structure. We're going down. We've got more blood before we have a turnaround here.
Yeah. So there's two ways that I would make that call, right? Either this pullback goes below these lows of last year in August, September. So either this pullback continues and we go below that structure and then something has changed, or if this, let's say it dips down here, but then the subsequent push is unable
Mm,
to get back above that, then there's also a shift here. It's like, why did we go from making higher highs and higher lows to now we're making lower highs, right?
mhm,
So you can kind of get that signal in either of those. Either we're going to find a bounce here, remain bullish, and then start to show weakness on that subsequent move up, which would be
mhm,
a warning signal. And granted, you'd still want to see what happens here, because if this comes down and it just comes back to here, then okay, maybe it's going to chop for a little bit and then find strength, and then you're going to try and continue. Like that could certainly
mm,
happen. But if we get this lower high move here back into like the 92 to 94K, and honestly, this could even go as high as like this 100K zone up here. And we'd still have to be a little bit cautious. Like if you get a rejection up there and price starts coming down, this is still a lower high,
yep.
right? So let me erase some of this brush on here. That way it's a little clearer to see. But yeah, I'd say like it's not going to be as simple as there's one level that we absolutely can't cross or absolutely must break. It's always a combination of things. You need a series of things to happen to give you that confluence. And what that is essentially this: we need to see a shift in this structure, and that shift can either happen with losing the trend to the downside without much relief, or that we find a bounce somewhere here, but the subsequent, quote unquote relief is unable to push past these prior highs, and it starts to come down. You see something like this, and then yeah, that's like this is a reason for concern, 100%.
Yeah,
If you were to come up
definitely.
here, get rejected somewhere in here, and then break this bounce that we potentially are going to put in, right?
Mhm.
That will not be good. That will not be good. Something will have changed in Bitcoin's character and market structure that is now, it should raise some questions. Why are people selling here
Yeah.
if previously they were selling up here? Why are they selling lower? And then
Mhm.
if it starts coming down, they bought here, why would they not buy here? Why would they let it go lower, right? So you have to kind of start asking some of those questions. Yeah.
How long is that time period between that first little?
Like this.
No, so the part where we peaked around whatever that was, 10, like the 100Ks
This one
range
here.
versus
Mm-hmm.
yeah, from that region all the way down
Okay.
to where we're at compared to the previous, that whole area
This one.
where we're sort of chopping. Yeah.
Yeah.
How long is that time period versus where we're at?
Yeah, I mean, it certainly was a much longer period. Last year,
That's my that's my
essentially,
worry. I'm worried we're gonna chop for a long time, and it's just gonna be
it could
dead.
happen. Yeah, it could happen. I mean, look, if you basically grab that entire period until the election pump that got us out of there, it was 79 3-day bars. So the 237 days. Okay, 237 days. This was from March through essentially November. March through November, just basically we're chopping here, right? Right now, it's only been a few months. It's only been a few months. If you want to call this initial high, even though this second peak went just slightly above it, but this was the first time that we topped up there. We're only 100 days in. We're 100 days in. So we could still, I guess to your point, if we spend another, if we were to spend another 237 days or equivalent, it takes us out till August of this year. So,
and that would put us in line potentially for that exact run up that Lady Trader's hoping for.
It could right? be. Yeah, it could be. It could be that, like, if this is I had to get a drink of coffee there. But if this is just doing, if this is just doing some kind of like equilibrium move up here, and it's just doing a tightening range where you're going to come back up, potentially do either an equal high up here or a slightly lower high, and then you're going to come down and put a higher low down here compared to whatever we're putting in down here, and then you're going to continue to see this chop just play out. Yeah, 100%. Like you totally could be doing something like this, and then we get that Q4 burst of energy out of here. It could be. It could happen, right?
Mm,
So this is kind of what it would look like if we did a chop like that. You know, if we were
yeah,
like in a tightening range. Yeah.
because we start seeing those lower highs, I think people would get real nervous that it's just over, and
Yes.
we're gonna head down to lower levels, and that's exactly when,
Yeah.
that's why I kind of like the spaces, because we get a real life look at high level traders, and we get to see, rather than just going off like the crypto altcoin people who are either max bearish or max bullish, depending on whatever the chart's doing that day. It's just not generally helpful to anybody. Versus now we're like, okay, like we have good balanced takes where you're okay being the contrarian and say, okay, everyone's feeling bearish, so I'm going to start looking for reasons that we maybe are going to have a reversal the other direction.
Yeah, 100%. I mean, one of those big reasons that we've talked a lot about, Kate, is the stablecoin dominance chart, right? So this is it's on a high time frame. It's a 3-day chart for stablecoin dominance, and like I've got BTC price up here just overlaid, just for Confluence and for you to kind of visualize what's happening here. But let me kind of walk you through this. But essentially, on this chart, after stablecoin dominance, because stablecoin dominance was much higher, and then it broke this level here, this like rough 8% level on stablecoin dominance, and then there's a series of patterns that it's been repeating down here, and that's what I kind of want to illustrate. That ever since it came down below these levels, here's what I noticed. Back in January of last year, you got stablecoin dominance, breaking below this level, back testing it, and then rejecting here at 8%. You can see that, right? Is that clear in the chart? Hopefully it's not too messy. You essentially had this. You had your stablecoin dominance break down, back test that zone, and then reject. Okay, do you see that?
I did.
And then same thing happened here in September. Stablecoin dominance went up back to that 8% level, rejected. Okay, same thing, rejection off that 8%. Where is stablecoin dominance today? It's right back at 7.8, basically 8%. So my question is, are we about to see this again? Right? Are we about to see a rejection on a higher time frame chart from this stablecoin dominance? And if so, every time that stablecoin dominance has rejected from here, what has Bitcoin's price done? It's rallied higher, significantly higher. When Bitcoin dominance, or when stablecoin dominance rejected here, Bitcoin's price rallied significantly higher. That marked the bottom. Actually, it marked the bottom here, marked the bottom here. My question is, are we marking a low here before another move up on BTC? That's the speculation.
How accurate is that? Is that just in recent times, or is this relatively something you can be watching and be counting?
No, this is something you can watch all the time.
Wow. Like in general, like when stables come down, Bitcoin usually rallies, type of thing.
Yeah. Oh, 100%. Yeah, 100%. This is just showing you liquidity flowing from stables into risk on assets. So basically, when this chart is pumping, your stable coins are gaining dominance because more people are moving into stables. When this chart is falling down, when it's dropping, people are exiting their stables and going back into BTC and alts. Yeah,
that is very cool.
So this could be significant. I mean, this could be that next leg that we need in the cycle if it bounces here, if we get this rejection here. The risk, right? Because I got to give you both sides. I got to give you both sides. The risk is that something is changing and this continues higher and goes back to this prior area above, which is bear market territory. Oh God. Right. This is bear market territory. Yeah, that's bear market territory. Wow. If I hide, wrong button. If I hide BTC, and let me hide this little channel here. That's bear market territory, right? Like you get the peaks of the market down here on the lows, and then this is bear market when you're moving up. Wow. So I mean, that's the risk. If this thing does something like that, Cade, where it pops out of this zone, back tests it, and then continues higher, like I have to start leaning into the idea that the cycle's potentially done. Right? You just have to, because if you're following the data, that's what the data is telling you. Regardless of what we want to believe based on emotions or how much technically should be left based on time, If
Mhm.
this much money starts flowing back into stablecoins, you have to entertain that that's a probable outcome.
How is it on like previous cycles at the previous last year of the 4 year cycles? Do they
Mhm.
typically look the same? Like if it's like right now we're only
Yeah, let's
four
do that.
months into the year. We
Yeah,
still
yeah,
got
let's do that.
8 months. So if we start to see that, are we just giving up that the 4 year cycle is going to have a big rally end of year, or is that something we can keep track of? Like, could it pop into that area, fake everybody out, and go right back down? I guess I'm curious on what the historically we've seen.
Well, here's what we've seen in the past, right? Like if you look here, this was the 2021 peak in November, right? And after BTC or after the stablecoin dominance essentially did this like break and back test that I'm talking about, right? It went up,
Mm-hmm.
back tested it, and continued higher. That was it. We were done.
Mm,
We were done. This entire time, it kind of chopped up here, and this is where you formed the lows, right? Um, Same thing happened back in March. So this was your initial March high or Q1 high of 2021, and then you saw that big rejection, right? But you didn't get the back test. You see how it came
mm,
back down? It came back into this lower level. That's why I'm really leaning into this alone here doesn't tell me anything. If we get the break and we get a back test and continuation higher, that's what will worry me. This right here.
mm.
A break above it does not worry me because you could just be doing this. You could be breaking
Right.
slightly above it and then just move back into it, and then we get the rally, and this was just a deeper correction than anyone was expecting. But if you get a back test and you're unable to get back below this, and you essentially flip this into a support from resistance, then this is going to continue higher, and then things change.
So swing traders got to be getting wrecked right now because it feels crazy to be able to hold more than a couple days here because of exactly that. You might get the breakout just to get a reversal, and now you've lost all the gains you've made versus scalping, right?
Yes and no. I think it depends on what time frame you trade. Like if you're swing trading, like on the daily chart or something, and you're more of like you hold trades for a month, something like that, or a couple months. You're riding the bigger trend. Then you're probably still okay. I mean, look at this. I mean, if let's say you went short up here because you happen to see the double top and you went short, doesn't really matter what's happening down here.
Right.
You went
Right.
short up here. So does it really matter that you've been holding your short for, a couple months? You're probably still good, depending on what your leverage is and depending on what the
Right.
funding rate is doing to you. The funding rate can eat at it, but you're still well into profits. Like you don't care if it even comes up back into the 90s. You may decide if it comes back into the 90s and rejects, you may decide to add a little bit more to your short there for
Mm,
continuation. Or once it loses this, right? Like it rejects, comes back down, starts accelerating, you may add some more here. You'll bring your net cost down, but
yep.
but you'll be able to continue riding that trend. Same thing that people did back here. I mean, I think that if you were long from the lows on BTC last year, even if you kind of caught this like mid range here, like the 30K, you probably weren't too worried what was happening here. Even if you were on a leverage long from down here, like
Mm,
did you really care that this was chopping like that for months? Probably not,
yeah.
unless the funding rate was just eating away at you. You probably didn't care too much. You probably could have range traded on a separate account, added
Mm,
to this on the dips. You could have been adding
right.
to that on the dips. You didn't really care. So
I
I
guess
think
my fear was that like if you're holding for multiple weeks or months, based on the fact that we did have a breakout. But it's like, how can you like? It's so hard to have faith that you wouldn't just see the reversal
no.
and now you're just back down on the trade. So in my head, I'm like, I feel like maybe this is a weird position, but it just feels like swing trading would be higher risk right now than scalping because it almost like it's just so volatile right now. Or no?
I think if you're trying to go into a swing trade right now, the answer is yes. But if you're grabbing the swing trades at extremes, then you're probably
Yeah.
not worried. Like if you caught
Mm,
this low somewhere back here,
right.
July,
Right.
August, September, and you said, okay, this is a swing entry that I'm going to hold, like you're still well above that. Granted, you've given up, close to maybe 50% of that
Yeah.
back.
Right. Right.
But you probably have an invalidation somewhere in here where, if you took that trade, I would hope you took some profits up here as soon as you
Right.
saw that this was like slowing down. And if you're still holding a piece of that, I'd assume somewhere in here you have an invalidation where you say, okay, if it comes too deep below this level, I'm just going to cut it. I'm going to take profits. A lot of people I've heard are kind of saying that 60 to 65K range is kind of where I keep hearing a lot of the higher time frame, longer term traders. They're saying, yeah, if it comes below that like 60, 65K range, then I'm probably just going to exit and just wait and see what happens. So, but everything's always dependent on what your time horizon is, depending on, you know, are you a spot trader? Are you a leverage trader? Are you taking positions with the plan to hold them, you know, for months? Or are you taking positions to just hold them for a day or a week? Or are you scalping, right? To your point, are you just scalping and you're just, I'm going to log on today, I'm going to take a couple of trades and then I'm out of the market and I took my money and I'm good and I'm just not messing with the volatility. So I think it all just really goes back to what you're looking to do. But there's no denying that, like, yes, this chop is highly tradable. If you choose to, if you so choose to, right?
Yeah.
But this is still clear. Like this, dude, this is so clean. I mean, check this out.
Hey, there's those parallel channels, baby.
There's your volatility range, man. So what I'm trying to show you with this is, even if price from here comes down here, catches a bounce, it's still inside the channel.
Yep.
Still inside the channel, coming right back to the March highs. No big deal. Dude, that is still a clean uptrend, 100%. Then you're just looking, okay, you get the bounce. Where could I potentially see some weakness on this rebound? Which, you know, middle of the channel is kind of right here in this like 100K range that we just, you know, we talked about a little while ago. You start seeing some weakness up here coming into that, you know, then you might be paying attention and looking for either something like that clearly shows trend is slowing down and reversing, or something like that would then say, okay, we're gaining some, oops, didn't mean to grab that one. We're gaining some momentum, right? And potentially your continuation.
Yeah.
So
wow.
yeah,
Very cool.
it's dude, and this is one of those things where you know, I wish more people were interested in understanding what these are doing and would zoom out a little bit more into the higher time frame. Unfortunately, a lot of CT, a lot of you know, the crypto Web3 community, they get into echo chambers and they get, you know, very tunnel visioned in what they're expecting, and they refuse to consider other outcomes outside of up only, or outside of just diamond hand and hold, and, you know, like you got to believe in something, and if you sell you're not going to make it, and all of these narratives that, you know, I'm going to throw it to you in a different way. Is there potentially some benefit to the whales, to the smart money, to the market makers, to the exchanges? Is there some benefit to them potentially that newer traders and retail traders lean into those narratives? Do they stand to gain something from the crowd believing in narratives such as, you know, don't sell, you got to hold, you know, like believe in something, up only? I don't know.
Yeah.
I think they could stand to, right? Those are all for profit entities. Who are they profiting off of? People who refuse to be on the right side of the trend.
Yeah. How long are people holding these trades? Like in this type of parallel range? And also my question is for like beginner traders. Do you recommend they start out with scalps just so, like, in my head, I'm like, a beginner is like, for them to be able to stomach a 2-month long trade feels probably like a stretch compared to doing some day trades or some, you know, maybe a couple days or something.
Yeah, I think like, and it's always a combination of, you take some leverage positions, but you also take some spot positions. And I think for the newer trader, when you're just starting off, the easiest thing to do is to buy and to hold. But I can tell you there's a big difference between buying here in 2021 and holding till today versus buying here in 2022 and holding till today.
Mm.
Two very different outcomes. Two very different outcomes. This guy that bought down here and held, he's up, right? Nicely, comfortably. The person that bought over here and held, they're barely up. And they're worried, is this thing coming back down to my entry again on this position that I've waited since 2021 until, end of 24 to basically break even and get into profit.
Or you've been top blasting for the last little while, like our boy Mr. Saylor. Raising that average cost basis quite a lot. He's in the 60s, I think now, or something, 60s or 70s, right?
Yeah. Dude, DCA is something that I think is very twisted in the crypto.
We're talking about it, I think, today, or one of these next few spaces. You brought it up the other day.
Yeah. DCA is something that I think the crypto community has taken this dollar cost average idea and essentially used it to justify buying at the wrong time, right? Because there's something to be said about dollar cost averaging. What's the point, Kate, of dollar cost averaging? Is it not to bring your average cost as low as possible? Yeah. Right? Like, is that not it? So how does top blasting fit into a dollar cost average strategy? It doesn't. It doesn't is the answer. It doesn't. It does not. And it should not belong in your strategy. If you wanted to DCA, right? Like let's say you've been in this game since 2018, and let's say you bought down here. Okay, you bought here, you waited. Like maybe this is DCA. You buy here. If you're lucky, you caught that. Hopefully you were buying there. I wouldn't have, recommended DCAing that, but maybe you bought there. Big dip. Maybe you bought there, right? You DCA points where there's like accumulation, DCA points. Right. But you've got no business DCAing these points. No business. Why?
I've spoken with some maxis here on this point in particular, and it's possible that they only would do this with Bitcoin because they believe in Bitcoin so much.
Sure.
But there was someone there talking about it, and he was like, "Look, if you just DCA every single day or every week or every month, whatever your thing is, your schedule, that they will beat anyone who reserves." Like for me, I am okay with DCAing, but I definitely keep extra cash for when there's extra big dips.
Yes.
And I'd prefer to load up there and then have a normal DCA basis if it's something that I'm bullish on as a 20-year horizon or longer, which Bitcoin is really one of the only assets I would ever consider putting in longer than that. And so Bitcoin, I'm like, yeah, I can see the idea of stacking some Bitcoin, but like very little at these prices compared to something at this lower prices. I don't see the appeal. I don't feel like the argument like is true. I'm just like, what do you mean? Like, I'll have more Bitcoin. I'll have more if I can buy it at the lower price. So like, why would I top blast?
That's exactly it. Is the perspective that CT fails to bring into the DCA conversation is maximizing your purchasing power, right? That's the single point that CT fails to consider when we're talking about DCA, is that we're not looking at it from the perspective of maximizing your dollar's purchasing power in terms of how many Satoshis can I get per dollar, instead of just saying, I'm going to accumulate as many Satoshis as possible. I want to get as many Satoshis as I can for my dollar. What's the best bang for my buck, right? And that you start to kill that if you're just blindly DCAing, unfortunately. And one way you could illustrate that is if you did a volume weighted average price back from, let's take September of 2017, and you were just DCAing this, like look where the VWAP is at. It's about 25K. Are you still significantly up? Yes. But if you what you fail to recognize is if you're top blasting these heavily the way Saylor is doing it, because you're just blindly aping in, dude, Saylor's like average cost is I think 65K or something like that. He's up here, right? And he's destroyed it in the last year or so. He's destroyed that average cost. And if you look at his buying on the Sailor tracker, he was doing pretty good in the past. Like he was buying low. Occasionally he'd have like a buy kind of near the top, occasionally something like that. But he was like he was buying the lows. He was doing pretty good.
Yeah.
And then we got into this last year, and man, he's just slamming the top. He's just buying the top, buying all
Well, I
of
think
it.
it's
Right?
possible because the narrative of this cycle is truly different. This is the final launch pad. Like I think people are thinking that in the same way Bitcoin one day touched 15K or 5K, whatever the number is, and never came back. I think that's what they're worried about. Is this is the institutional adoption? We never see the price come back down. I guess for me, I can't tell this is true. I guess we will find out in the next couple of years who was right. But
Yeah.
sometimes it feels almost like like I worked hard for my money, right? Like I worked hard to grow the net worth from literally in debt
100%.
to making hundreds of dollars to to finally
Yeah.
doing okay. And I'm like, bro, the idea of, like you just said, reducing my purchasing power rather than maximizing it, it's not appealing at all. I'm like, bro, I grinded for that money. I do not have any desire to top blast anything. I'd love to pick up as much Bitcoin as possible. I just don't see a scenario where this makes any sense to be buying at 100. Like I remember having like a big purchase around 103, and then I just like had a moment where I was like, what am I doing? Like, yes, if Bitcoin goes to 1 million, then I'll be upset. And if it happens the next like 2 months, but are the chances of that happening higher than the chance that we just reign for the next year? And I was like, no, of course it's not. Like, what are you talking about? Like we've so that was kind of my thoughts with it.
But it all goes back to these like ridiculous expectations, Cade, where for some reason, and it's what it is it's just it's how can I put this? Euphoria based expectations where your desired outcome, you want it to be like just something mind boggling that doesn't really fit in with reality. And let me kind of, let me maybe give a little bit of context to that. So last year when we were chopping around this entire range, right? Dude, I got roasted because back in March, I took significant profits on all of my crypto back in March. I was very public about it. I got roasted. Dude, why are you selling here? Like, you're ridiculous, blah, blah, blah. You're going to miss it. There was even some spaces that we jumped on where some of the question I was getting from other traders, which surprised me, from other traders, right? It was like, dude, what if you wake up tomorrow and price just like immediately flies up to 100K or whatever? And it's like, yeah, like it can happen, but the probability of just a straight vertical move that's going to do it in one candle, that we're all going to miss it, that's not going to give any opportunity, like, doesn't that sound a little silly? Like, where has that happened? But it was this narrative of ETFs are buying it, exchanges are low on supply, we're going to go into supply shock. There's a math problem with Bitcoin. They're going to have to change the decimal because there's not enough Bitcoin, for the whole world, and blah. Like it was the silliest argument I had ever heard. No one is selling. There's no one is selling. No one is selling. Like, dude, what's going to happen if ETFs keep buying and no one is selling? And I'm like, when have we ever seen a market in the history of humanity where there's not a seller for every buyer? I mean, I can't think of one. There's always traders. Granted, the price is going to, move in accordance with where people are willing to sell that. You've got supply and demand to consider, but there's always sellers. And so there was this narrative of, oh my gosh, like I can't sell because this thing could just, tomorrow I could wake up and it could be at $1 million. It was the silliest thing, right? And I made a post, I think it was like last week, kind of mocking this, jokingly, but you know what it reminds me of, Cade, is, if you've ever been in a relationship long enough, sometimes like, girls will say these silly things where they're like, oh, babe, what if I got in a car accident tomorrow and I was, deformed, just tremendously deformed, and I lost both of my legs? Would you still love me, and would you still stay with me? Or what if I go into a coma and I don't wake up for 10 years? Are you still gonna be with me and love me? And it's like, okay, so now the crypto bros are doing the equivalent of that. Well, what if tomorrow price just shoots up to $1 million? Like, are you willing to miss out? It's like, what kind of question is that? As silly as it sounds for me to say that tomorrow we're going to wake up and Bitcoin's going to go to zero is just as silly as us expecting that we're going to wake up and it's going to go to $1 million. Both are just rooted in not in logic. Well,
I think it's also just a lack of chart understanding. Like I respect a lot of the maxis because their conviction in Bitcoin, and I share a lot of their conviction in Bitcoin, but a lot of them are in the are have the belief that they have because they're like, oh, I tried trade, it didn't work, and I'm like, okay, well that makes sense. Like I understand what you're saying now. I get, and that's fine. By the way, like your strategy, because you don't want to learn how to trade, makes sense. You just get as much Bitcoin as you can over the next 50 years, you'll probably be good. But to shit on trading, I've always thought was strange because you can't deny that. You just can't deny certain parts of the price or certain areas of the price where people sell a lot and they buy a lot. And it's just it just happens to be that they always touch at the same point. I'm like, right, that's just stupid. It's just like I don't know. There's no way to argue it. I think that argument is silly to me.
Well, the root of that argument is unfortunately, and it all goes back to human. I feel like you and I talk a lot about like human psychology and human behavior because I do talk about that a lot. It's been an element of just my adult life that I've spent a lot of time studying and involved in, and then being a parent, you're kind of looking at these little miniature humans and you're recognizing all of the ways they learn, the ways they interact with the world, the way they form opinions and the way they ask questions. Right. So for me, I just lean into that a lot. And one of the things that I notice in that is most of the people that make those comments, Cade, where they say, well, I tried trading and I failed, or I lost my whole bag or whatever. Very few of those people truly approach trading as it's a skill set that I need to learn. It's a process and I need to manage risk accordingly until then. I'm not trying to get rich in a week. And I need to understand that this is something that's going to take months, years, multiple cycles, that I'm going to have to experience failure. I'm going to have to experience losing accounts. I'm going to have to go through all of that in the process of learning it and getting good at it. And this is how everything in life works. I don't understand why we try and treat trading like it's different from anything else. If you and I suddenly said, hey, you know what, we want to play professional basketball or football or whatever, and our expectation is we're going to go do one camp one summer and be like, I wasn't cut out for it, I'm no good, versus we recognize that, okay, we're older, we're maybe past our prime. Like these are all the things we're facing. These are all the challenges that we're going to have to overcome. What's the true expectation at the end of this? That like, am I really going to get to that level of being like a 1% athlete? And then just understanding that it's going to be this long process, right? Like, I mean, dude, and it's the same thing for everything. And I think a lot of people just maybe don't have that experience. I got that through working in sales and marketing and some of the things like that, where you face a lot of rejection. You deal with a lot of people telling you no until people tell you yes, and you're kind of sharpening the axe and you're working on your craft that entire time. And that's what trading is. That's what trading is you have to go through that. It's like, imagine if my expectation was I'm going to go play a game of basketball, but I'm unwilling to miss any shots. I'm unwilling to miss any shots. If I'm going to miss some shots, I don't want to play. Like, isn't that a little silly? I mean, doesn't that sound a little silly, right? So, but people have just these misplaced expectations, unfortunately. So, yeah, that's kind of something I see. Like when people say, I tried trading, it didn't work. Well, most of the things you try in life don't work, but the things you commit to over time
you get better
tend to do okay.
Yeah, that makes a lot of sense, honestly. Yeah, that's a really, really good point there, because it didn't work. It's like that concept right there is like wrong. The statement is it's like wrongly put.
Yeah,
because it's not something you just get.
And it's not something that works. Yeah, it's not just something that works. It's not like a drill that I buy and I push the button and it works.
Right.
It's a skill. Did I become competent in it? Right. It's not a did it work, did it not work?
Yeah, that's good stuff. That's really good stuff. So for beginner traders, what's a good place? So we mentioned watching price action is a great place to get started. Say they're watch plenty of price action. They're months in. All they've done is watch price action. They've applied even some of the parallel channels that you've shown. They're like, okay, I'm starting to understand momentum. I'm starting to understand this bounce and the range. I'm ready to start some trades. What does that look like? I know people usually will go and grab some kind of brokerage account like TradeStation or whoever, get their thing. They're like, okay, good to go. And they want to play some trades. Do they need to pay? Like, how important is it? Like when I first learned trade, there was like all these numbers you had to set it. It's got to be exactly this many points. You want to set it for this percentage. And there was like all these numbers you had to memorize. Some of them are automated. And then some you actually have to type in and do like a math calculator on some website. And I remember being like, dude, this is so like, there's so much friction here. Like, I don't even want to do this anymore. Are you like, what's the right process you think for?
I mean, a lot of that is really just, I think, trying to set you up for risk management is essentially what that is. Like understanding what the size of your trades should be relative to your trade account balance, right? Or your portfolio balance. And so, yeah, you have to kind of start understanding the percentages. If I'm risking, 5% of my total trade account, and then I'm willing to risk on that 5%, I'm willing to risk, 1 or 2% loss on that account. Like, what is the total loss you're actually taking to your total account, to your complete account, right? So, but I would say, like, for a new person, definitely spend a lot of time looking at the charts, learn to zoom out. Cause like a lot of new traders, I think, they think that the lower you go on the time frame scale here, right? Like a daily to them feels like a disadvantage versus like a 5 minute, because the 5 minute is like, ooh, I'm getting like the most recent up-to-date price. Sure. I mean, you're getting it on the daily as well. You're just not seeing the noise, right? But sure, I can get the argument, like you're getting all these extra little candles, so you're getting a lot more information. But unfortunately, like here in this 5 minute time frame, you can get really stuck finding things that truly don't matter. You'll be finding all kinds of bullish setups and entering positions thinking that something's going to change. So for example, here, like you might be saying, oh, okay, look, we're getting you're getting a inverse head and shoulder, which could play out. This could be like doing something like that, and oh, it's gonna send. Okay, cool. Here's the problem. You start zooming out. I mean, does this look like it's slowing down anytime soon?
Like, not look like a good setup to me.
Does this look like there's a good setup there? Right. I mean, like, let's look at the daily. Does after this massive red sell-off, high volume sell-off, does this look like I really need to be getting super bullish right here? Right. I mean, it just, I don't see it. I don't see it. It's like, this is the difference between understanding what season I'm in, what month I'm in. Like, it's like understanding, okay, I'm in April, it's like springtime, how should I dress for that? Versus the 5 minutes, you're trying to decide like what clothes to have in your closet and how you're going to dress based on like the 5 minute weather. Oh, right now it's 80 degrees. And then in the next 5 minutes, it's 60 degrees. And then the 5 minutes after that, it's 70 degrees. That's dumb. Like, zoom out, get your range, understand what season you're in, understand what the high and the low of the day are, and you kind of dress for the chop. You dress for the fact that it's going to get a little warm, and then in the evening it'll get a little cold and you'll be fine. Right. But I'm not making, weather decisions based on the 1 minute weather temperature, right? Or the real time temperature right now. So, yeah, it's just funny, man. But then it's all context. Like, if maybe you're on the 5 minute and all you're trying to do is you're trying to do 5 minute scalps, and you're just trying to grab this, you want to make 2% here, and then you're done for the day, and then you'll wait for some other setup, right? Like, sure. In that case, you're fine. But if you're like accumulating, like you're looking at this and you're thinking, oh, these are the lows, I'm going to start accumulating, I'm going to start going into size here because this looks bottomed. Well, it's like, wow, it looks bottom on a 5 minute. On a 4 hour chart, I don't see it. I don't see where it's bottomed there, right? Like, it's just, I don't see it. So,
dude, I remember remember a few months ago when memes were just everything. Everyone was trading memes. Dude, that period, especially once I saw the turnaround, I think my brain started to catch, like, oh, this thing has lost energy. This thing is dead, for sure dead. And for me, like, it's interesting. Like, after all the meme stuff, the thing I walked away with most was a little bit more of what's the word I'm looking for? Not edge. Of an inkling I guess, when I'm like, yeah, this thing looks puttered
Got it.
out a little bit here. Versus, I think most people are looking for that, like Dom says all the time, and like you say, trying to catch that falling knife right before it reverses. I feel like that, like you guys say all the time, like I just don't know if that's the right strategy. It may be in certain times of markets, maybe that's something you should be looking for more. I don't know, but right now, doesn't seem to be. It seems to be you should worry for that indication that we are going to reverse before you enter a trade.
Yeah, I don't know if I've ever found like a massive advantage in trying to catch like the Pico bottom on a low time frame that it's made a huge difference in the longer term result, right? I've found that I've had much better outcomes catching the confirmation of trend changes, even if that meant I left a little bit on the table, but I caught the larger percent of the confirmed move, like the safer move, right? So I think that's how I've personally experienced that. You know, everyone may have a different experience with that. To your point, buying dips, right? Because there's this like narrative of, you know, continue to buy the dips in the bull market, continue to buy the dips. And I would say, I guess, to put it maybe a little in a way that's a little softer, but trying to get you to think, since the beginning of the year, has buying the dip served us well? And if the answer to that is no, then you have to question your buy the dip thesis. Right? You have to say, is that still a strategy that's working here? Has that strategy worked since the beginning of the year? I currently don't know any dip that has profitably worked except these that we had back here. And notice what they dipped into: a high time frame support. Right? They weren't just random dips somewhere. They were dips in a zone that mattered on a high time frame. So I think like a takeaway from this is understand the high time frame zones and be okay with leaning into strategies like buy the dip if it's in the right location. If it's in the right location. If it's not in the right location, you know, maybe be a little more cautious, because I feel like a lot of CT leaves out the location component when they're talking about trades. Like, this is a good setup. Okay. But is that setup, is that good setup, that bullish setup, is it happening in a good location? Is it happening in the right place? Because if it's not, then it's a little less good, right? It's not as good. So location matters. You know, seeing, and here, look, let me give you also a equal but opposite example. If BTC comes back down here to like this high 70s, and all of a sudden down here you start seeing bearish patterns, or patterns that you're like, oh, that does not look good. You're leaning into a low time frame pattern in a high time frame zone that is mismatched. I'm not worried about bearish patterns down here because I'm in a high time frame support zone, or I'm in a zone where there's higher probability of bullish outcomes. And up here, I'm in a zone that there's a higher probability of bearish outcomes. If that makes sense.
Does make sense.
So up here, I can see like really bullish things and be like, oh my gosh, like this is getting so bullish. We're getting a breakout. You know, I'm going to be a breakout trader. But you might not be in the right place for that to happen, right? It kind of reminds me like of, I don't know about your parents, Kate, but like growing up, like my parents would always kind of say this, like there's a time and a place for that, like for certain things, right? Like there's a time and a place for
my Japanese mother said that.
Yeah, you know what I mean? Like there's a place to be playful, there's a place to be professional, there's a place to be, courteous versus there's a place to like roughhouse a little bit. And I think that in the charts, there's also places for those things. There's a place to be a little more bullish, to lean into bullish bias. There's a place to lean into bearish bias. And it doesn't mean that you're going to get a bearish outcome because you're leaning into a bearish outcome or into a bearish outlook, but it means that you're playing kind of the probability. You're playing the probability of there's reason to be cautious here. So I'm going to lean into what the reasonable play is, and I'm willing to be wrong. I'm willing to be wrong. I would say like in these high time frame zones, you probably have anywhere between a 70 to 80% probability versus like a 20 to 30% exception. Meaning when you were above this zone here, you had back here, you had 70 to 80% probability that all moves into this were going to be bounces, right? Was there a 20 to 30% chance that it was going to break lower? Yes. But you had a higher probability of it bouncing until it didn't, right? Here it did not. It broke it. Here, what played out here was that 20 to 30%, right? And so the same thing will happen when we come back down here. If we come back down here, there's a 70 to 80% chance that you're going to find support somewhere down here in these zones. Is there a 20 to 30% chance that it could continue lower and it could lose these zones? Yes. The higher probability is that you're going to find a bounce. The same thing if price moves up. Price starts coming up, 70 to 80% probability that you're going to get sticky up here. You're going to face some some resistance. There's a 20, 30% chance that it can continue higher. Sometimes that 20, 30% plays out. It played out here. It could play out at some point, right? But you got to kind of understand like how those odds tend to lean in the chart.
How often do you think right now? So you've been trading for a little while now. How many years have you been trading now?
Consistently and full time, a little bit over 3, I believe. All in all, I started getting serious about trading. I think that's closer to about 5 or 6 years potentially. So
to me, that's like
good chunk
that's
of time.
doable. That's
Dude,
doable for the average person watching. I'm like, bro, a few years from now, you could be marking up charts like a pro.
Yeah.
That's a pretty good deal for me.
And I feel like, hey, to be honest, I mean, I feel like I'm just really catching my stride. I feel like I'm moving from stumbling my way into some wins into kind of, okay, like I'm getting proficient in certain setups that I look for. I'm a little bit more tempered in my expectations.
Yeah.
And it's crazy, but it does take time. I think most people, it really like reminds me of that saying that most people overestimate what they can achieve in a year, but then underestimate what they can do in 10, right? Or in 5 for this example, right? And I think that that's the case with trading, unfortunately, is because we go through these seasons where like the meme season or the NFT season where, you've got people turning a few $100 into tens of thousands or hundreds of thousands of dollars. It just sets the wrong expectations, unfortunately. But those are all like very rare outcomes. I wish we had a way to quantify that, and we had like a metric that says, yeah, look, 1% of wallets have turned, 3 or 4 figures into 6 and 7 figures. Like I wish we talked more about that, because I'm sure the data supports that. I'm certain the data supports that, and that 99% of people have lost money or broke even at best.
Yeah, I agree with that. Damn, dude, this is a masterclass in trading. A lot of people. I really enjoyed that.
It's me ranting is what it is.
No, this is great, bro. This is really, really good. By the way, is there, for people who are still watching, I was going to say, if there's any other things you wanted to let people know about for your own stuff. I know you're streaming. I don't know if there's like a schedule for your streams right now. Is it more just when you've got time, you hop on?
Yeah, it's more been just kind of like when I'm not busy doing other stuff and when I feel like
Gotcha.
it, and but I've been wanting to formalize it a little bit more and potentially start like multi-streaming. That way, like I'm doing it on X, but I'm also throwing it on
Nice.
YouTube or something. Haven't really done that. I went through a period. This was, when was it? 2021, I think. I was doing an educational stream twice a week for about 6 to 8 months or so.
Mhm.
And that was fun. I really enjoyed that. And I felt like I grew a lot from that as well. So I feel like I kind of need to get back to that. But the problem is, like, I'll set up these schedules and then the market is doing something and I'm like, oh, I need to be like paying attention right now. Or
Yep.
or
It's tough.
or just stuff happens, like life happens, and I got to do family stuff or whatever. And it's just like, well,
Yeah. I hear
but
that.
I don't know. I do want to ease into it because I do enjoy it.
Mhm.
And more than anything, like I'm just someone that I feel, I don't know, like, and maybe it's a little bit of like, unfortunately, I hate to label it as this, but like maybe white knight type syndrome, where it's like I see people getting wrecked and it's like, man, I want to help, but
Yeah.
I recognize that I can't help everyone,
Mhm.
and I recognize that there's only so much I can do. But if I could even contribute just a little bit of value that helps someone, like, I'm happy to do that.
Let's go. Let's go. Be sure, if you're watching the stream, to check out Bits of Wealth stuff right above our faces. You can find his handle. If you're on YouTube, right below our faces, you can go to the description and find his handle there and give him a follow on X, or Twitter, formerly known as Twitter. And be sure to keep up with it because he's pretty consistently now pumping out charts and some analysis and stuff on the timeline, as well as he jumps in tons of spaces for trading, not just our own. The dude is a fiend. You can't get enough of these spaces and streams. Now you're a beast. That's the way, by the way, to grow an account and to get to connect with people. It is the way, is spaces. I just have not seen any other way to grow. I mean, we've tripled our account at Wolf in a year organically, and that's been crazy. That's purely been because of spaces. Sitting in spaces, speaking in spaces, hosting spaces is definitely the way. It takes, just like this, the trading, it takes a while. It's a bit of an art form sometimes even, and
oh, it is 100%.
Figure out ways to speak as well. Yeah. I mean, it's hard to. It's because in trading spaces we have to communicate what we're seeing on this chart without the chart, which is a little bit hard sometimes.
Yes. Yeah, and you guys do an amazing job. Like all the entire Wolf crew on all the different accounts as well. It is a skill, man. It's no doubt it's a skill to be able to lead a conversation and also kind of like moderate at the same time. Make sure it doesn't get too crazy. keep the audience engaged. Keep the flow going. And you guys do a great job, man. You do an amazing job on stream as well. Just like keeping everyone engaged and keeping the conversation flowing. And you do a good job. And it is a skill, man. 100%. I think you compare it to trading, but it's 100%. It's the same thing. It takes time. It takes a lot of failure, a lot of waiting, for those breakthroughs, but they come, man. So it's just consistency. I guess, like, if there's one takeaway from what you just said and what I've kind of been harping on, is everything comes down to consistency. At the end of the day, are you willing to do something for a sustained period of time, consistently, through the ups and downs, until you produce an outcome? And if you are, generally you produce an outcome, right?
Yeah. No, that's fantastic. That's fantastic, dude. As always, appreciate you coming on. The streams are easy because I like learning. I want to learn. I will say I learn fast, but I think sometimes I step in slow unless I'm forced to dive into the fire. And so with trading, I think just because I'm doing so many spaces, I give myself the excuse that it's okay. I can slowly tap my way in. However, the benefit of that is I have no choice but to slowly just stare at charts. And, the more you guys are posting charts up in the spaces, the more I get to look at. And so, if there's, I have no idea what to expect in a bear market. I don't know if we're going to see this 4-year cycle play out and we just go right back into hibernation, or if we see a bit of a divergence from what we've seen in the past cycles. But I'll certainly see, and I'm definitely looking forward to getting better at this. So appreciate you, Van, as always.
Likewise.
Let's keep doing these streams. And for everyone who's watching, definitely keep tuning into these. Give him a follow if you're on Twitter, and get this man to start his own YouTube. And we'll catch you guys all in the next one. We got a space actually in about 1 hour talking about the RWA industry, followed right after at 3 p.m. about XRP. And then right after that, a 4 p.m. space on Market Talk. And then I believe at 6 p.m. I have a Bitcoin maxi space where we just do Bitcoin education. So we'll catch you guys all in those spaces, and we'll see you in the next one. Take care.
Peace.
3,